Happy Tuesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Tuesday, November 15th, 2022. I've got a big announcement to make. I'm joking. Guess what? It's on the PPI data this morning. So we actually have the PPI data came out for the month of October. Very similarly to the October CPI data, we saw a downside surprise across all the different categories. Starting with headline PPI, we had a 2.5 or 250 basis point acceleration to 1.7% on a 3-month annualized basis. But again, on a month-over-month basis, we did surprise consensus estimates. Core PPI, which I think is more important than headline PPI, decelerated 110 basis points to 2.3% on a 3-month annualized basis. That's the lowest print we've seen since June of 2020. So that's a big deal. And then lastly, core PPI ex trade services came in flat at 2.6%. So again, just going to that core PPI print, that's exactly what the market is focused on here this morning in terms of the positive responses we're seeing across risk assets, the negative response we're seeing in the U.S. dollar. So again, we talked about this in our leadoff morning note this morning about the sort of change in skew and what that means as it relates to the forward outlook for risk assets. We talked about some of the developing signals and a couple very important market indicators that they'll sort of kind of give you clues as to what we think about risk assets on a go-forward basis. So definitely check that out. Not going to give away the keys to the castle here on a free program. You're welcome to subscribe at any time. And you're welcome to cancel at any time. You know, if we suck at our job, we certainly don't want to be siphoning funds away from you if we're not adding value. We do add a lot of value, though, if I do say so myself. Anyway, getting into our longbow dashboard here, starting with global macro. The first thing I'd say before we even go down at the individual indicator level, just follow my mouse going down the range view from all these different indicators. And as you can see, nothing's overbought, nothing's oversold. So this is probably a day where you shouldn't be making any changes in your portfolio. Again, we're starting with the dollar, gold, 10-year, S&P, VIX, NASDAQ, Russell, Bitcoin, Ethereum, Shanghai, crude oil. If none of these things are overbought or oversold, you're probably overreacting to something in the markets today. So again, just let it breathe. Let the markets come to you. Again, everyone's just pretty clear, at least behind the 42 macro paywall, on our outlook for risk assets, not just between now and year end, but also in terms of the first half of next year, in terms of some of the important dynamics that I think investors are going to have to risk manage in that window of time. So anyway, just getting to that Bloomberg dollar, that's bearish short-term price momentum, medium-term, neutral medium-term price momentum, middle of the range. Gold bullish short-term price momentum, neutral medium-term price momentum, middle of the range. 10-year neutral short-term, bullish medium-term, middle of the range. S&P neutral in both durations, middle of the range. VIX bearish on both durations, middle of the range there. NASDAQ 100 neutral short-term, bearish medium-term, middle of the range. Russell 2000 neutral on short-term, neutral on medium-term as well, also in the middle of the range. Bitcoin, Ethereum, both bearish on both durations and also in the middle of their respective ranges. Shanghai Composite, bullish from a short-term perspective, bearish from a medium-term perspective. We wrote about China today. We got China's hard data out, as well as the medium-term lending facility data as well. So we updated our medium-term thoughts on China in today's leadoff morning note. Definitely go check that out. And then lastly, crude oil, that's neutral from a short-term perspective, bearish from a medium-term perspective, in the middle of the range there. And then lastly, transitioning to my free daily alpha tab, where we got about 300 ETFs here, all representing individual factor exposures across global macro. We are sorted by the odds column in terms of things that are most overbought to most oversold. Nothing's actionable on the overbought side this morning, so we'll scroll down to the bottom of the list. Is there anything oversold and actionable today? Not quite. You got a KIE. This would actually be a phenomenal setup. You got bullish short-term momentum, bearish or bullish medium-term momentum, and you're effectively oversold here. So this is the kind of security you'd be buying with two hands, just using the tools in the dashboard. The one thing that I call out that's not as supportive is you got a pretty significant implied volatility discount. If you look at 30-day at the money put implied vol relative to 30-day realized vol, that's not a great setup in terms of buying the dip here in insurers rather. But just from a tactical trading perspective, this is as good as it gets. You got an upwardly sloping probable range line in terms of the lower boundary there with bullish medium-term and short-term price momentum. The only thing that can make this better was a little bit more short interest and a implied volatility premium that you can trade into and cause that gamma squeeze dynamic once the market starts to move in the other direction. So with that, Darius Dale presenting our macro minute for Tuesday, November 15th. Everyone have a great day out there. We'll catch you back here tomorrow. Cheers.